So we were doing AS accounting MCQs, and the paper is May, June 23, 11. We were doing that MCQs paper. And this is the part 2 for that paper. We were solving 20th MCQs. Which action would, in general, improve the asset test ratio of a business in the short term? So the answer is going to be selling surplus non-current assets and selling inventory. So 2 and 3 is the answer. B is the answer. How come? Because when you sell your non-current assets, you will increase cash, but there is no increase in the trade payables. The current liabilities will remain the same. The asset test ratio will increase. Selling inventory is not a part of asset test ratio. Your cash will increase and your asset test ratio will also improve. So 2 and 3 is the answer. B is the answer. A business had current liabilities of 4,000 at its year end. The asset test ratio was 1.5:1. Current ratio was 2.5 to 2.25:1. What was the value of inventory held at the year end? So you need to solve this question properly. Otherwise, you won't be able to solve it. So what you will do, current ratio, the formula is going to be current assets divided by current liabilities, and that is 2.25 over 1, right? So current liabilities are given in the question. Current assets is current liabilities are 4,000. That is 2.5 over 1. So 4,000 multiplied by 2.5. So current assets are going to be 10,000. 4,000 into 2.5, that is 10,000. Then liquid ratio, asset test ratio. The formula is liquid assets over current liabilities. And liquid assets does not include inventory into it. The liquid assets over current liabilities is the formula. And the ratio is 1.5 over 1. Liquid assets, we don't know. Current liabilities are going to be 4,000, which is given in the question, 1.5 over 1. So liquid assets are, or the current assets without inventory are 6,000. So the inventory will be current assets minus liquid assets. 10,000 minus 6,000. 4,000 is the answer. So B is the answer. Current assets minus liquid assets. 10,000 minus. Oh, cha. Okay. Sorry. 10,000 minus 6,000. 4,000 is not the answer because 2.25. So 2.25 multiplied by 4,000. What is the answer? That is 9,000. Okay, sorry. So 9,000 is going to be the answer for this. So now we can easily do that. As it is 2.25. So the current assets are going to be 9,000. So 9,000 minus 6,000, A is the answer, right? So A is going to be the answer for this question, that the inventory is going to be A 3,000. 2.25 multiplied by 4,000 will be there. Following information is available for a company for its year end 31st December. What is the return on capital employed ratio? The return on capital employed ratio, the formula is going to be operating profit over capital employed into 100. Operating profit means profit from operations, which is already given in the question, 84,000, divided by capital employed means equity plus non-current liability. So now let's calculate the equity. Share capital is a part of equity. That's fine. 2 lakh. Total reserves, including the profit for the year, 1,50,000. And non-current liability will be a part of this. That is going to be your capital employed. 2 lakh plus 1 plus 1, 487,000 will be your capital employed. 34,000 divided by 487,000 into 100, you will get the answer of return on capital employed. 84,000 divided by 4,87,000 into 100, you will get the answer of return on capital employed. Kitna aata hai ji? If you just look at that, there is another formula through which you can find capital employed, that is non-current assets plus current assets minus current liabilities. So 4,72,000 plus 60,000 minus 45,000. Again, you will get the same answer for the capital employed. The capital employed can be calculated through different ways. 17.25 B is going to be the answer for this question. 17.25%. An employee is paid at the hourly rate of 20 basic pay for working 8 hours a day. So you are getting $20 basic pay for working 8 hours a day. Overtime is paid at the hourly rate of basic pay plus 25%. So 20 plus 25% means time and a quarter. So time and a quarter ka matlab means kya? 5. So it will become 25. So 25 will be paid. $25 will be paid if you work more than 8 hours a day. A productivity bonus is also paid at the hourly rate of basic pay plus 50% time and a half for every unit produced more than 30 units per day. So if you are producing more than 30 units per day, you will be paid extra bonus at the hourly rate of basic pay plus 50% time and a half for every unit produced more than 30 units per day. On Wednesday, the employees work 10 hours and produce 32 units. So first of all, if you just calculate it, 8 hours you have calculated, and 20 is going, $20 is the rate per hour. So you will be getting $160 because we have worked 8 hours a day at the rate of $20. So the overtime will be 2 hours. And for those 2 hours, you are getting time and a half extra payment. Yani you will be paid 25 per hour. That will become 50. Now, as you are producing 32 units, so 2 units you are producing more. And for those, because our productivity bonus is also paid at the hourly rate of basic pay plus 50% for every unit produced more than 30 units per day. So for 2 units, you will be paid basic pay, which is 20, and 50% time and a half. So that is 20, which includes 20 plus time and a half will be 10. 10 plus 20, 30 you will be paid extra for each unit. For each unit produced more than 30 units. 2 units are produced more than 30 units. So 2 multiplied by 30 is the rate, that is going to be 60. 160 plus 50 will be 210, and 210 plus 60 will be 270. So C is the answer. 270 will be the answer for this question. And the gross pay for Wednesday is going to be 270 because you have produced 2 units more than the required limit. Julia is a retailer of electronic equipment. She decided to introduce a system of just-in-time inventory management. You will find just-in-time inventory management questions now because it has recently been a part of the syllabus just for a little portion of the time, but you have studied it in business studies. Just-in-time inventory management means that you are not maintaining inventory, you are just purchasing and producing the inventory and selling it. Which benefit can she expect from this? To be able to take advantage quickly of product improvements. No, it has nothing to do with the product improvements. To increase the amount of trade discount she can receive. Nothing like that. To limit the effect on her profit of price rise by the manufacturer. Because increase the amount of trade discount she can receive only it is possible when you are purchasing in bulk. But now you are purchasing just in time. You are not basically storage. There is no storage cost. To protect herself better from shortages of goods to sell. Not shortage of goods can create because you are using just in time. So shortage of goods, chances of shortage of goods has increased. So C is the answer. To limit the effect on her profit of price rises by the manufacturer. So if the manufacturer will rise the price because you are purchasing just in time inventory, the price rise will be limited because you will purchase only when you need that. So just in time inventory management will have an effect of that. Increase the amount of, right? Okay, next is going to be the Justin is an accountant and charges her clients a fee at an hourly rate plus overheads. He also adds a markup of 20%. Following budget information is available. Annual hours worked 1610, annual overhead expenditure 56350, direct labor rate per hour 45, extra charge if job is greater than 15 hours, $200, and overheads are charged on a direct labor hour basis. How much will Justin charge a client for a job which takes 20 hours to complete? So how much will Justin charge a client for a job which takes 20 hours to complete? So direct labor rate per hour already given, annual hours worked is already given, or at an hourly rate plus overheads. Okay. And she also adds a markup of 20%. The markup will also be there. Extra charge of 200 will have to be paid because job has taken 20 hours and 15 hours, above 15 hours, $200 will be paid extra. Annual overhead expenditure is given 56350. So you can calculate the overhead rate actually. How come 56350 divided by annual hours 1610, you will get rate, overhead rate, OAR, which is multiplied by 20 then, and 20 hours into 45 will also be paid for direct labor. So it's quite easy. Let me calculate it for you. So that is going to be 20 into 45, that is the labor cost, and then 56350 divided by 1610 will be the overhead absorption rate, OAR. How much it comes? 56350 divided by 1610, how much it comes? Overhead absorption rate, that is going to be 35. Okay, so 35 will be the overhead absorption rate, and the 20 hours are already there. Multiply it with 35, and then you will add it up, but you will also include 200 of the extra charge. So 20 into 45 will be 900. 20 into 35 will be 700. And 200 is the extra charge. So total amount is going to be 1800, and 20%, 360 will be the markup. It will be, markup is a calculation on cost. So 2160C is going to be the answer for this question. Yes. So C is the answer for this question, because by adding a cost, which is 1800, and by adding markup 20%, we will get the total selling price, which we are going to charge to the client. That is 2160. Okay. Next is, which statement describes the purpose of overhead apportionment? Which statement describes the purpose of overhead apportionment? To assign specific costs to production departments, to assign specific costs to service departments, to share common costs to production departments, to share common costs to service departments. Right. Which statement describes the purpose of overhead apportionment? To share common costs to production departments. Because service department has no cost actually. They will transfer all their costs to production departments. And overhead apportionment we need only when there is a common cost, and which needs to be assigned to the production department. To share common cost to production department, C is the answer. A business has two production departments, machining and assembly. The budgeted direct labor hours for each department are machining 4,000, assembly 16,000. The business has calculated overhead absorption rate. Machining $12 per direct machine hour, or 7.7 per direct labor hour. Insurance of 4,800 relating to the assembly department was incorrectly omitted when making the calculation. So insurance is basically the overhead expenditure, and which is not yet added in the calculation of overheads in the assembly department. And if we, what is the correct overhead absorption rate for the assembly department? It's quite easy actually, because overhead absorption rate for the assembly department is 7.7 per direct labor hours. And for assembly department, direct labor hour are 16,000, right? Now, 4,800 cost has been increased because it is not added. So 4,800 divided by 16,000, which is the hours, we will get the overhead absorption rate, which needs to be added in 7.7 to get the correct overhead absorption rate. So 4,800 is the overhead cost divided by 16,000.3 will be the, and Assembly department. 8 is going to be the answer. So C is the answer. C is the answer, sir. How come? 4800 divided by 16,000. 0.3 is the overhead absorption rate, which is not yet being taken into account. So 0.3 will be added in the overhead absorption rate of assembly. 7.7 plus 0.3, 8. C is the answer. The correct overhead absorption rate answer is C. So May, June 33, 11, 28. Which statement about marginal costing are correct? Which statement about marginal costing are correct? It only uses fixed and variable cost in calculation. It only uses variable cost in calculation, or it should only be used for long-term planning decision. It should only be used for short-term planning decision. The 2 and 4 will be the answer. So D is the answer. Though I'll go with sorry, I will go with the answer is going to be B is the answer, but I think what is the answer in the mark scheme? If I'm not wrong, we have done that already. Fareed, if you have an idea. B is the answer, that is right. I'll go with B because it only uses fixed and variable cost in calculation. That's fine. And it should be used only for decision making. Yeah, that's the reason we have discussed that the answer in the mark scheme is D, because he is basically thinking like that we are using a contribution approach. So when marginal costing, we use it as marginal costing, we take as that only variable cost will be taken as part of product cost. So we are talking about production cost. So for production cost, we take only variable cost in calculation. And for short-term planning decision, that is already there, which is a part of the question. A business makes and sells a single type of product. The following information is available: selling price, direct material, direct labor. The business also has a semi-variable overhead associated with this type of product. The overhead is 32,000 when output is 20,000, but rises to 40,000 when output is 40,000. So what is the break-even point for this type of product? We have already discussed that high and low point method we will use, and by using, yes, sir, GG. So we will be using high and low point method. And how come? Change in cost divided by change in units. Because we need to find fixed cost. Why is that? Because we need to find break-even point. And the formula to find break-even point is fixed cost divided by contribution per unit. Contribution per unit is available 10.8 minus variable cost, which is 6.4. So 10.8 minus 6.4, we will get 4.4. 4.4 we will get easily. So 4.4 is going to be the answer for this. So change in cost, $40,000 with 32,000, that is 8,000. And change in units, 20,000 and 40,000, that is 20,000. So 8,000 divided by 20,000, how much is the variable overhead rate? 8,000 divided by 20,000. What is the variable overhead rate? That is 0.125, if I'm not wrong. So we will use 20,000. Total cost for 20,000 units is 32,000. And we will subtract less variable cost from this. That is 20,000 into 0.125. 0.4. Okay. So that is going to be 0.4 actually. Let me correct it. So change in cost is 8,000 and change in units is 20,000. So 0.4 will be the variable overhead rate. So variable cost will be 20,000 multiplied by 0.4. So how much it will be? 8,000. So total cost 32,000 minus 8,000. So 24,000 will be your fixed cost divided by contribution per unit is 4.4. You will get the answer of break-even point in units. That is 5455. So A is the answer. A is the answer. 5455 will be the answer for the break-even point. So we have used we have used high and low point method to find the variable cost, and then from total cost we have subtracted the variable cost to get the fixed cost, and fixed cost divided by contribution per unit is your break-even point. But you can use any of these 2 points. If you take 40,000, then even 40,000 into 4.4 is 16,000, and 40,000 is the dollars is the total cost minus 16,000. You will get again the fixed cost as the same, that is will be 24,000. So this is how we have calculated it. What is the purpose of cost volume profit analysis? Comparing actual and budgeted cost, organizing resources in the most efficient way, planning to achieve targeted profit, preparing annual financial statements. Yes, please. Easy, eh? G, can you answer that? Three. What is the answer? Not checking. You need to answer that actually. I want you to answer that. C is the answer. Planning to achieve targeted profit actually. Because what we do, we change cost, we change volume, and we see the effect on profit with the change in cost and volume. So it means that we want to achieve a particular profit which is not yet achieved. This is how we will be able to handle this question. So this is the end of this paper, and if we can find some other paper. Okay.